Greetings and welcome to Pure Common Law Trusts Part 2. We're going to continue from where we left off last time, and let's get right down to it. Please, if you're in the room, hit the like. Glad you enjoyed Part 1. If you were here for Part 1, you're really going to enjoy Part 2. And greetings. And that being said, let's get started. Audit them in the house. Okay, we were just going over how the common law trust, the pure common law trust, solves problems. We're going to briefly go over this and then we'll get right to where we left off so we can have a context from where we left off last time. The pure common law trust solves problems. If the councils had been using, this is from the other one here. We're going to take it right from here. This on the ease of use and affordability. The pure common law trust is easy to use, and most people can afford it. It is now available not only to the super rich, but also to those with more modest assets. It is the best method for increasing privacy and protecting assets I know of, and that's the author speaking. Not to be construed as the intent of this broadcast, which is not for any professional, personal, financial, legal, lawful, or tax advice. Don't do this at home. Let's continue. Advantages of the pure common law trust. Let's look at these bullet points here. Every aspect of it is perfectly lawful. Perfectly meaning every single part of it. Not missing anything. Is lawful. Guaranteed by the United States Constitution, Supreme Court decisions, and other court decisions. It is protected by the Constitution under the right to contract. It is inexpensive to establish, can be maintained by yourself without an attorney, and involves minimal paperwork. It greatly reduces or eliminates attorneys' fees. Because it has no reporting requirements to any state or government, it reduces or eliminates accountants' fees. Once it has been established, there are no maintenance fees. A pure common law trust established in one state can operate in any other state. It can operate any lawful business anywhere in the world. It provides limited liability protection and most of the advantages of a corporation with none of the disadvantages. It can easily change the title of your property, but you may use and enjoy the assets during your lifetime. It is made irrevocable to avoid any question as to the ownership of the assets. It renders assets virtually judgment-proof. It can be used to reduce or eliminate the need for liability insurance. It continues unaffected upon your death. Let's see who benefits the most from a pure common law trust. Sovereign individuals, business owners, independent contractors, professionals such as doctors, dentists, chiropractors, etc., retired people, investors, foreigners, and anyone with assets. So, next part is dealing with the bureaucrats. Hang on a second. Volume's low on this one? Check, 1, 2. Yeah, it seems low. Okay, let me fix that. See why that's doing that. Interesting. There we go. Thank you. Audit them. I hope it didn't detract too much from the message here. It should be a lot better now. Great. Excellent. Okay, so let's continue. So now we're on to dealing with bureaucrats. Actually, I believe this is where we left off. Suppose you use a pure common law trust to operate a business, and a bureaucrat comes to the business premises to ask questions like, do you have a business license? Why haven't you filed such and such a report or return? What is your sales tax number? How many employees do you have? Do you have an OSHA certificate? What's your job position in the organization, etc.? You can use several responses here. Sorry, Mr. Bureaucrat, I'm not authorized to answer your questions. Please put your questions in writing, and I'll pass them on to the principals. The principals are the trustees of the pure common law trust. You get that? The principals, are the trustees of the pure common law trust. If the bureaucrat wants to know who the principals are, respond, I believe it's in the public records. The name of the business is name of the pure common law trust. I believe you can look it up at the recorder's office in blah, blah, blah county, California. Here's another response. Here's when they come asking for any of these things here. Mr. Bureaucrat, I've been authorized to provide you with information about the company, subject to approval of the principals. Please put your questions in writing, and I'll submit them to the trustees. If the bureaucrat later comes back, you say to him, sorry, Mr. Bureaucrat, but the principals refuse to give their approval. Next one here is, Mr. Bureaucrat, before I provide you with information, please give me a written undertaking that the information I give you will not be used as evidence against me. This is a great one here. Here's another one. Mr. Bureaucrat, before I can answer your questions, I need to consult with my attorney. Here's another one. Use the constructive notice on page 115. Get the bureaucrat's name. Fill out the sign form, preferably in duplicate so you can keep a copy. Get a witness, if available, to sign it. Hand the original to the bureaucrat. So let's take a look at this constructive notice. But before we do that, let's check up with the chat. And if everything is coming in loud and clear, we're going to continue. I'm going to go looking for the page 115 here. Oh, there we go. 115. No, it's still not going to do it. All right, so we don't have page 115 here, but we'll find it. What do we do here? All right. Use the judgment to choose your response. Your judgment. Consider treating the bureaucrat politely and with respect. So now let's look at what bureaucrats can do. Okay, so we're on page 111, so that's 4 more pages ahead. 221. So page 115, right? There's 135. Wow, this thing really 118, 111. Okay, so we're missing those. Those are probably in an attachment I have elsewhere. We'll come to that later. So what bureaucrats do? Bureaucrats have the ability to organize an armed goon squad to raid your home or business and to take away cash, books, records, files, computers, inventory, etc. Sometimes their strategy is to simply perform such a raid with the purpose of wrecking your business and or your life. They have no intention of prosecuting you or taking any legal action. They simply want to wreck your life and or business. So it's wise to be prepared for such raids. Keep off-site backups of all computer systems and files and other records. You need to be able to continue your business. You may also want to organize your affairs in such a way that you can rapidly move to other, We're really missing those pages. Well, I can just give you some anecdotal advice here on this one. Not advice, just experience that a good way to keep backups of things like this is to keep it in triplicate and in different um, formats, in at least some in different geographical locations in case there's like a natural disaster where you're storing your backups, and have them in different formats. And hopefully you're going to have it in three different formats, but at least two, and have it so it's something that'll be backwards compatible for a good long time and not going to be prone to easy damage. Uh, that being said, let's continue here and see what we got on page. Looks like we skipped a few of the forms and some of the text here. But we're on to a new paragraph, so that's good. The IRS perspective. The schemes targeted by the Internal Revenue Service often consist of convoluted, multi-tiered structures, typically involving more than one trust and other entities as well, each holding different assets of the taxpayer. For example, the taxpayer's business can be owned by one entity, the business equipment by a second entity, the taxpayer's home by a third, and an automobile by a fourth, as well as interest and other trusts. Funds may flow from one trust to another trust by way of rental agreements, fees for services, purchase and sale agreements, and distributions. Some trusts purport to involve charitable purposes. In some situations, one or more foreign trusts may also be part of the arrangement. So these are the schemes targeted by these characters here. The convoluted, multi-tiered structures, typically involving more than one trust and other entities as well, holding the different assets. So the IRS examples of abusive truth arrangements. In Notice 9724, the Internal Revenue Service classified abusive trust arrangements into the following 5 types. It further indicated that an abusive arrangement might involve some of the arrangements described. Might involve. So these are some of the things that we want to watch out for, according to the author here. Let's take a closer look here. A, the business trust. The scheme involves the transfer of a business by its owner to a trust, sometimes described as an unincorporated business trust, in exchange for ownership or other beneficial interest certificates. The trust makes payments to the holders of these certificates, deducting such payments as either a business expense or a trust distribution, which purports to result in the reduction of the taxable income of the business. Of course, the owner's self-employment income is eliminated because he is receiving distributions from a trust, not income from self-employment. In some cases, the connivance purports to eliminate the owner's estate tax liability through a self-canceling at death feature of this trust units. Remember, these are similar to shares, but not shares. Alternatively, by a sale at a nominal price. So a typical price that, let's see here. Interesting there. So that's one of the what they consider abusive trust arrangements to look out for. B, the equipment or service trust. The equipment trust is formed to hold equipment that is rented or leased to the business trust, often at inflated rates. The service trust is formed to provide services to the business trust, often for inflated fees. Under these abusive trust arrangements, income is drained from the business trust through inflated rentals and or fees, and those amounts are offset by the equipment trust through inflated depreciation deductions resulting from a sham purchase of the equipment by the trust. In addition, the owner, seller of the equipment, takes the inconsistent position that the trust units he received in exchange for the sale of the equipment had an indeterminable value, and that he therefore owes no tax on the sale. Both the equipment And the service trust will often utilize distributions to other trusts to further reduce or eliminate trust income. Oh boy, nice schemes here. Let's go over C, the family residence trust. The owner of the family residence transfers the residence, including its furnishings, to a trust. The goal of this arrangement is to convert non-deductible personal expenditures into deductible items. The machinations created to effect the desired result again include the taking of inconsistent positions by the trust and the owner. The trust takes a position that it has acquired the residence in exchange for which resulted in a stepped-up basis with respect to which the trust is allowed a depreciation deduction because it is in the business of renting the property. Little or no rent is paid, of course, and the owner takes a position that no gain is recognized on the sale because the trust units he received have no ascertainable value, and he and his family can live rent-free in the residence as its caretakers for the benefit of the trust. In the event the trust Okay, well, we go on with those schemes, and then we skip over here. What page are we on now? Jeez, 135. So, all right, we're on to getting ready. Part 2 of this manual provides step-by-step procedures for preparing a pure common law trust. This section will help you organize people, inventories, and records so that you can complete the pure common law trust indenture, trust deed, in various forms needed for each trust. So I guess getting ready is good enough because we don't plan on focusing on any bad schemes, but just be aware and know not to get involved in them. Let's proceed. This manual includes the forms and the deeds for 3 trusts: a management trust, an organizational business trust, and a holding trust. It provides explanations on how to deal with a variety of cases and how to implement and formalize your trusts. Each trust that you compile will contain 3 parts: the declaration, deed and contract of trust; trust records, the contracts, the minutes, and the letters; and trust schedules, property certificates, holders, and references, the trust citations. So, where to begin? Start taking notes here. A. Make extra copies of all the provided forms. B. Obtain 1 3-ring notebook binder for each trust. A 1-inch binder will serve well at the beginning, but you will probably need a larger binder later. C. Label each binder appropriately and place the trust deeds along with their schedules into their respective notebooks. D. Divide each trust record book with index tabs into the following sections: 1. The trust deed. 2. The trust records. A. The letters, minutes, certificates, contracts, exchanges, and appointments. 3. The trust schedules. 4. The citations, Schedule H. And 5. The forms of government and the trust. E. Only keep trust records of 1 trust in each notebook. More than 1 trust or other material is in a notebook, it may inadvertently tie them all together as one. F. Keep this manual, which is your instruction book, separate from your worksheets, charts, lists, and other trust records. Assets inventory. Let's see. Let me check the chat here real quick. All right, we're good to go. And Bill Thomas is asking, are common law trusts used to protect open space? Which open space are you talking about? Lots of open space. You'll probably clarify that, or we'll continue on here and maybe it'll answer it in the text. So we're on to assets and inventory. Copy and complete the asset list on page 136. Is it here? No. Well, we'll probably have that later. Let's see here. And complete the inventory of all the assets and property that will be placed into the pure common law trust. The asset list will help you organize everything, and the inventory will become Schedule A. See Schedule A on page 260 when it is finally completed. If finding and listing all of the assets and property is difficult, you might begin by listing all of those things that come to mind. A detailed inventory is not important until you begin to finalize. Okay, so we're on to organizing. We're missing a lot of pages here, but hopefully this will give you a general outlook what we're dealing with here. Organizing. Decide what assets belong to which trust before actually completing any transfers. Make flowcharts to divide up the assets and use connecting lines to show services and cash flow, like a block diagram showing the functional relations between the different assets here. Although complicated, it might also be helpful to create various drafts. Wow, this is really weird. Of all of the documentation to see how everything interrelates. Do this several times or as often as necessary to determine the cash flow, responsibility, benefits provided, and ownership. While doing this over and over is a hassle, it will give you the best understanding for all of the intricacies and will help you to construct the most rewarding arrangement. So this is about organizing assets into the trust. So now we go into the process of transferring assets. So good to see that this is here. Transferring or exchanging assets into a pure common law trust requires little more than completing and filing of paperwork. To simplify this process, we have attempted to reduce this task to completing one or more of the following forms. We have a proposal to exchange, a bill of sale, bill of exchange, trust minutes, schedule of property, letters of introduction, letters of appointment, quitclaim deeds, liens, mortgages. These forms are used and filed in various ways while you transfer all of your assets to pure common law trust. Through this process, we will retitle vehicles, real estate, and other properties. Through this process, we will retitle vehicles, real estate, and other property. Regardless of who you are dealing with, neatly complete formal documentation always makes it easier. Neatly completing. Proposal to exchange. So this is our first one on the bullet points here. A proposal to exchange, such as the example and form provided, let's see if that's there later, is simply a letter indicating the desire and willingness of a person, an exchanger, to exchange an item of their property for a certificate of capital units. Capital units. Interesting. An exchanger. Property for certificate of capital units. And it's an exchange. There's a proposal to exchange. The proposal describes the following: the offered property, and if necessary, makes reference to more descriptive documents, and the item that will be accepted for the exchange. Sounds like a contract here. The proposal is addressed to one or both of the trustees of the pure common law trust that believe it is most appropriate for receiving and holding the kind of property that you are offering. Interesting here. So we're going to skip way ahead, it looks like. Okay, so here we go. Here's a declaration of contract of trust. The declaration and contract of trust. This document is to be interpreted and executed under the right of contract law with original situs in the state of California. Okay, so that's for this one. This indenture authorizes its trustees to perform under the name, blah, 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 whatever your name is here, an irrevocable pure trust. Here we go. A certificate of beneficial interest, some business trust. An irrevocable pure common law trust. The certificate number 1, 10 units. is a trust organization under the laws of the trust situs. Interesting use there, trust situs. So situs is a site of site of a crime, site of the law. Pursuant to a contract dated the 20 blah 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 here, creating the above said company, and in compliance with all the terms and considerations thereof. Here's the name and address of the holder here. The holder of 10 units subject to the following terms and conditions. So this is your little beneficial. This is what you get for giving property into this trust here. The holder shall not be entitled to any share or distribution of profit. In the event the trustees elect not to renew the contract for the existence of the company at the end of the 25-year period, or in the event of prior liquidation for any reason, the holder shall be entitled to his proportionate share of the net liquidated assets of the company. 3. All units are fully paid and non-assessable when issued, and no liability for the company's actions shall injure to the holder. The holder shall have no rights, powers, privileges, or interests in control over the assets or management of the company. The units evidenced by the certificate shall be transferable in accordance with the endorsement on the reverse hereof, in compliance with the terms and conditions of the aforesaid contract. And here we have the certificate is signed, dated, blah, blah, blah. Here goes somebody's name, title. Well, that's all we got for this one. That's the end of this document here. Pretty interesting here. And it's nice to see these are some of the public documents that you would have to have prepared. Let's check out the chat here. Yeah, Max, I don't know if anyone else has access to this document, but I'll look. I could have sworn I saw some more stuff with this. I don't know why we're only seeing this much here, but perhaps that's all I got. So these open space trusts, land trusts, differ from pure common law. I'm sure it's something different if sounds like it. Then again, California is kind of a different animal. There's a lot of people that have been grandfathered in before it was a so-called state, so that might come into effect there. Who's to say, though? All right. Well, on that, I guess part 2 ended up being a lot easier to digest than part 1. We did answer all those questions that it spoke about, but I believe that the examples given here in part 2 with both precautions and some of the essential documents and strategies for beginning your pure common law trust hopefully helped everybody get to a better standing and understanding of what's involved with pure common law trusts, their purposes, and their benefits and protections for that. That being said, I want to thank everyone for coming in tonight, and please hit that bell notification if you are subscribed to make sure you get notified for any of the upcoming live streams. And with that said, I would like to wish everybody, now we've officially passed midnight here on the East Coast, a happy Independence Day to everyone. And this is a good way to celebrate the freedoms here and the liberties we have that protect things such as a pure common law trust here on America. So with that said, salute to you all for coming in tonight, and we'll see you on the next one. Peace out.